Well, another round of mortgage tightening. The man at the center of these changes, Jeremy Rudin. He's the superintendent of OSFI. Earlier today, John Ehrlichman and I spoke with Mr. Rudin about the changes and why he thinks they're needed.
What we're doing is we're reinforcing the importance of sound underwriting practices across the federally regulated sphere. And in that initiative, the most important thing is to underline the importance of the first line of defense, which is the borrower's capacity to repay. And we're reinforcing what's already in our mortgage underwriting guideline and clarifying things to emphasize the importance of assessing the borrower's ability to repay both the borrower's income and also their ability to navigate through changes in the economic and financial circumstances, including a possible increase in mortgage interest rates when the borrower comes to renew.
And when you made the announcement earlier this morning about this new stringent stress test for people even putting down more than 20%, you said the ability of the borrower to repay must be the first line of defense. You start using words like defense, you must be seeing some real risks out there to take this move.
So we've had a mortgage underwriting guideline since 2012, and it has always emphasized that capacity is the most important consideration in sound mortgage underwriting, that commitment, so verifying that borrowers are committed to repaying, they have sometimes called character, and that collateral, which is important, which is the value of the property against which the loan is secured, is also important, but it should be the third consideration, not the first. What we're doing today is reinforcing that.
So what it comes down to, though, is that as a borrower, I walk into a bank and I say, I have more than 20% to put down. This is after January 1st. And they say, you know what, we're going to give you a mortgage at 3%, but there's a test that's involved, right? That's going to test me at a much more stringent level.
So in sound underwriting, the lender has to decide what is the borrower's maximum capacity. And that borrowing capacity needs to be calculated with some margin for a possible increase in interest rates at renewal. These mortgages are long-term commitments on the part of the lender. We've long had the stress testing principle. That is to say, this idea that you need to prepare, leave a margin for higher interest rates. It's been in B20 from the beginning. It's applied really across the board, most explicitly to mortgages with a 4-year term or less. Now we're underlining that it applies to mortgages of all terms.
I think a lot of people look at this news in the context of all the other news that's out there. Like inevitably people will look at a headline today, it'll say, you know, tighter rules around obtaining a mortgage. That doesn't tell you nearly half the story, but that's the inevitability of headlines. And in the face of all the other news related to the housing markets in the hottest parts of Canada right now, all the other measures that have been taken, some, you know, far from your jurisdiction, others closer. I think the biggest concern, and maybe you saw some of this as you were seeking commentary during the proposal period, is, you know, things might not end well for Canada's housing market as a result. Maybe it's ironic, but as a result of all these measures coming down in what has felt like a fairly short amount of time.
So no one can predict with any certainty what's going to happen in housing markets, what's going to happen to house prices, what's going to happen to interest rates. Our job at OSFI is to make sure that the federally regulated lenders and the system as a whole is prepared to navigate through a range of severe but nonetheless plausible scenarios, continue to provide financial services to Canadians, continue to gain the confidence of Canadians, and that's what we're doing with this initiative.
Another concern here is that as rules are tightened for federally regulated financial institutions, this is your mandate, your area of control, that people who could no longer get the loan they want at the bank or buy as much house as they hope they could have after January 1st are just going to move off to the riskier shadow banking industry. They're going to pay higher rates. There's going to be riskier loans. When you were taking a look at making this move, was that factored in, saying we could be driving people into even riskier behaviors we try to make the system safer?
So our responsibility and our authority is over the federally regulated lenders, and the federally regulated mortgage insurers in this case, and that's really the limit of where we're at. This does represent, roughly speaking, 80% of mortgage originations in Canada, so it's the majority of the market. We're certainly aware of the fact that if we raise underwriting standards or require federally regulated lenders to raise their standards, that's potentially an opportunity for lenders that are not inside our authority to pick up business. That's not our intention. It's not something that we think would be a positive development. But nonetheless, we have a responsibility to supervise and regulate the federal system, and that's what we're doing.
When it comes to the big price run-up that we saw in Vancouver and then on the heels of that Toronto, a lot of people thought it was simply speculative behavior, people gambling on the fact that home prices go up forever. Is there anything in this more stringent stress test that would take some of that speculative behavior out of the market? Does it stop them from buying?
In our system, it's the lenders that are responsible for setting their own underwriting practices, their own standards. They have to conform, broadly speaking, to the principles or the rules that are in B20, but within that they have a fair bit of freedom. So lenders can make loans for investment properties if they wish. What we insist upon is that they follow sound practices, and that the most important part of that is verifying the borrower's capacity to repay the loan.
Have you thought at all about, I mean, I think a lot of our viewers will also just ask the ultimate question, like, how much house can I afford? This happens, you know, it starts to affect a lot of that process. You go out, you're looking for a home, you know, there's other people looking, you sort of try to ballpark all that stuff. So that's a big question that people ask. Did you think at all about that factor in terms of, will that push people into sort of, you know, another line of housing, and then do we have to look at the potential impacts from that? You know, certainly even here in a market like Ontario or the Toronto area, as you started to see some changes to the rules here, all of a sudden you saw a lot of people buying condos, right? So did you have to sort of think about, if that headline is how much house can I afford as a result of the changes that you guys are implementing, what are the ramifications from that? Do you have to take that step and look forward into that issue as well?
I don't think anyone really has the ability to forecast in detail what's going to happen in the markets. So I said our mandate is the safety and soundness of the federally regulated lenders. We believe strongly that in sound underwriting, you provide a certain margin so that the borrower can continue to service the loan if there's an increase in interest rates. That's going to make for a more stable financial system. That's in everybody's interest.
Now, you've gone ahead with the more stringent stress test. You pretty much signaled all the way along, this is what we want to do, and you've done it. Some people have said that you were playing with fire by doing this, that it could be a monumental mistake. If it turns out that it is a monumental mistake, it triggers a massive correction in Canadian housing, would there be occasion for OSFI to step back and say, okay, maybe we should change things again? Surely no one wants that outcome. No one wants a big crash in Canadian housing.
Strong underwriting is important when prices are rising. It's important when prices are falling, because nobody knows what prices are going to do. Strong underwriting makes housing markets more stable. It makes prices, whatever they are, more sustainable. It's always a good idea.
The mortgage origination by the big banks, I mean, when we were looking at their most recent earnings, you saw some pretty healthy growth in mortgages overall. Was the feedback that you received from the industry players that with these changes they would continue to make those mortgages available? I mean, it might seem like a strange question, but some banks might just, you know, lend a little bit less as a result of these changes, you would think.
Again, no one can really predict what the demand is going to be, what their opportunities are, exactly what their funding costs are. They all have plans. They all have plans to continue to grow their mortgage books. The specifics you'd have to speak to the individual lenders about.
Now, if mortgage rates ever went back to the kind of levels that I used to hear my parents talk about around the kitchen table in the 80s, some things I can't even imagine, 12, 13, 14, 18%, would we be as concerned then with stress testing the borrower in that kind of environment? Is that sort of flexibility down the road? Maybe we won't need a test if interest rates do go much higher?
Well, interest rates can always go up. You remember 13, I remember 21. So it's not really clear that if interest rates go up, it means that you can call the top and say they can't go any higher. I think we're in a good place on this stress test. It fits well with the interest rate stress test that the minister has established in the high ratio space. But we always review what we're doing. I mean, this, after all, is an update of an existing guideline, and we'll continue to monitor and consider changes after we've had more opportunity to observe.
John mentioned earlier the fact that we've seen a lot of changes from a lot of different bodies who have different responsibilities. We know that when it comes to trying to regulate real estate, you have a role to play, but so many other bodies do. Is it time in Canada to have a coordinating body to try to tackle the big issues? You have your piece, and you can only speak to your piece, but do we need something more?
That's not really an OSFI issue. We are focused on using the authorities that we've been given to acquit ourselves of the mandate that Parliament's given us, and it's a larger question as to what other jurisdictions and regulators should be doing and what mechanisms should exist.
That was OSFI Superintendent Jeremy Rudin.